Today is Friday morning, March the 15th, and I didn't do a video last night, but I did post a couple of things on Twitter that I just want to review on the Ichimoku charts. One is that I said at one point that I didn't like the market. I just didn't feel right with the imbalance in the breadth. The New York Stock Exchange showed positive, and the NASDAQ showed negative breadth, or maybe it was the other way around, but it just meant a choppy time was coming up. So I said that I was going to look at the 15-minute Ichimoku and make a decision and try to limit my loss to, just $100. I did get out at 53.86. So that was the chart that I posted, and I said right here was when I was going to get out. And I started that with a 20-cent trailing stop. We've lost it. But anyways, I started off with a trailing stop. Let's go to the chart. So here's the 15-minute Intel chart. And it was right, where was it? Right around here, where I just felt that it was time to get out. We've been following the 15-minute cloud, and the Chiku span was getting some support. But once it broke through these candles here, I was looking at upward resistance, and maybe downward pressure would be maybe the play of the day. So I put a 20-cent trailing stop on it and got out. And then the resulting day proved it was a good decision. Now we might have a little bit of a bounce this morning when the Chiku span gets support on the 15-minute cloud. But we'll wait and see what happens. The other thing I said was that Apple was doing just as we expected it to do. And I'm going to show you what I mean by that. We're going to look at the one-day chart here. And there was 3 places we wanted marked on Apple. We said that we would have resistance at the 200-day moving average, which is this red line. And we can see that Wednesday we closed exactly at the 200-day moving average. The second alert that we set for ourselves was the Chiku span getting resistance at the 200-day moving average, and you can see that that occurred right here. So if you follow this white line back, you'll see right here that this is where the resistance was. At the top of the day on Wednesday, we hit the Chiku span, hit the 200 and moved back. And then yesterday, we had the Chiku span cross over the 200. Now our next point of resistance is going to be the Chiku span meeting this flat portion of the cloud, and we should find Apple maybe today, more likely early next week, is going to make it a run at 185.54, and you're going to see resistance at the cloud and then a pullback. So let's keep an eye on those 2 things in the market today. Just a quick look at the S&P 500 shows us that we are still showing resistance at this 28.14, because that was resistance here and here and here and here, and it was support for all these times here, and it was resistance there. So it's just an important area, and we're going to need to break through 28.14 before we see any more movement upwards. And if we can't, if there aren't enough buyers coming into the market at 28.14, then we're going to go down, and we're going to look for support in 2 places. The price will get support on the cloud, or the Chiku span will get support on the candles, and we might have an opportunity where both of those could be true, like right in here. We could see support at 27.52 when the Chiku span comes there and price comes down to the cloud. So let's say 27.52, 28.14 are our key areas to watch. Fuck, how did that goddamn thing turn off?